EasyJet said this morning it's expecting a record summer as it continues to add capacity to meet demand. The airline, which has launched 150 new routes for the current financial year, has opened bases at Birmingham and Alicante during the last 6 months and said today it would reopen its base at Southend Airport, which was closed during the pandemic, with the creation of 130 jobs. Well, EasyJet was reporting a pre-tax loss of £350 million for the 6 months to the end of March. That was down from one of £411 million in the same period last year. It also announced that its chief executive, Johan Lundgren, will step down next year after 7 years in the role. I'm very pleased to say Johan Lundgren joins me now. Look, Johan, very good to see you this morning. You're expecting capacity of 100 million seats this year. How much further can you go beyond that?
Well, good morning. And listen, I think it's important to see that is a reflection really of a positive demand that we're seeing really across the whole of the network. But you pointed out our opening of the base in Southend as well, and that is just demonstrates our, the demand we see here in the UK, and also that we believe we have more to do to invest in there as well. So we're going to grow around 8%. That gives us that 100 million passenger numbers that you're talking about approximately, and that is more than the market overall, we should say. So we do see a positive demand, and this is very much supported also by EasyJet Holidays that is now contributing also to the group, including the airline.
Exactly so. I mean, it contributed around a quarter of your profits last year. How big can it become as part of the business?
Well, it's interesting that it's a very unique model, because what it actually does, it converts people that are EasyJet customers who have elsewhere booked hotels in with other channels as well. So it's really still a relatively small part of the overall passenger numbers that the airline has. So this can go much further and beyond what we're seeing today. And we expect this to start, growing now, increasing presence also in other parts in Europe outside the UK. So we launched in Switzerland, we launched in France and in Germany. But the key core part of this is still the UK, and we're seeing phenomenal growth and demand for it here in the UK.
And you say in the statement today that North Africa is a big part of your plans for next year, Tunisia and Egypt. What do you like about those markets, those routes?
Yeah, well, first of all, I mean, we're launching them and increasing, this capacity growth in the winter season. And when it comes to Tunisia, Egypt, and we're also launching Cape Verde as an example for the winter, we know historically that these are traditional, very strong in the winter time. So that will help us reduce the winter losses as we're progressing towards, improving the overall performance of the company. So it's a growth of about 35% in this region. And then on top of that, we then obviously have also then the launch in Cape Verde, which will contribute positively to the overall company result.
Now, the pilots' union rejected a pay offer from you earlier this week. How worried should people be about strike action this summer?
Well, first of all, it was a very narrow vote on that. So we look to resolve this and work out with BALPA now what the next step is. And I should just point out that there's no strike action called on that. And like I said, it's a narrow vote. It's disappointing, but, we look forward to work constructively with them to resolve this.
Now, you've announced today that you're stepping down next year. I wonder why you've chosen now to announce this, given that the business seems to be in its best shape for years. You've navigated through the pandemic. Surely things get a bit easier from here.
Well, look, it's I'm going to be in the company for over 7 years when I'm going to retire here in the early part of 2025. So I think that's fair enough to recognize that is longer than the average of any FTSE 100. If you take that into consideration. But look, it's an absolute privilege to have this job. I think, to be able to serve the purpose of democratizing travel and making low-cost travel easy for something that, 100 million of customers can enjoy, on every year. It's an amazing privilege to do. But, I worked with the board as well. So this is a seamless and an orderly transition. The company's CFO, Kenton Jarvis, will take over after me. And he is an excellent leader, and it will be a good thing for the business as well, and allow me to take a little bit of a time off.
Very good. Well, we hope to see you again before you go. Johan, thanks very much indeed for sparing the time to talk today. We do appreciate it. Thank you. Now, the UK's biggest listed residential landlord said this morning it's on course to deliver 1,000 new rental homes this year in Birmingham, Bristol and North London. Grainger was reporting adjusted earnings of £44.4 million for the 6 months to the end of March. That was down 6% on the same period last year. Well, with me now is Helen Gordon. She's Grainger's chief executive. Helen, welcome to you. Brief word on the results, first of all. I mean, this drop in earnings looks essentially down to the fact that this time last year you made more from selling properties than you did this time around.
Yes, and that isn't necessarily a reflection on the market because we normally have a second weighting in any event. So we're selling our older stock, we're selling them around the same price in terms of valuations. So it isn't, I expect it to equalise out over the year.
OK. Net rental income during the period was up 11%. To what extent have you been putting up rents?
So 11% reflects the fact that we've got a new pipeline coming through. We delivered over 1,200 homes last year. We've got another 1,000 this year. And we've been putting up our rents on average around 8%. So 8.1% on our new PRS homes and 7.1% on our older regulated properties. I have to say our homes are still incredibly affordable. 70% of them are affordable on the national living wage, and on average our households spend around 28% of their income on rent.
Now, you've got a pipeline of 5,000 build-to-rent properties. What sort of period are you looking to deliver those?
So we're delivering our committed pipeline over the next 3 years, but we obviously have to build a much longer pipeline. So we've got a pipeline that will double our net rental income over the next 5 years. And we have longer term, we put things in planning and legal because, as you well know, the planning system takes a long time for us to work through. So it's 1.5 billion invested in new homes, and that compares to our existing portfolio of 3.4 billion.
Are you seeing any moderation in build inflation?
We are, and building inflation has ameliorated. We went through the sort of peak, and that is helping us look at the viability of new schemes to bring forward. So yes, it's coming down. Building costs are still high. Viability for all housing is challenged, and particularly in London. However, we have got a great pipeline to deliver affordable homes in London.
Now, you've said today that you're aspiring for REIT status, Real Estate Investment Trust. You better explain to the uninitiated what advantages that bestows.
So REITs were introduced into the UK to help hopefully stimulate long-term investment in rental housing, because 98% of the sector is owned by small buy-to-let landlords. What REIT status will do is mean that we will distribute our income. At the moment, we distribute 50% of our rents to our shareholders, and in the future, it'll be 90% of our profits, and they will be untaxed in our company, but taxed in the hands of a shareholder. So it's quite an efficient structure to make sure that our investors can, maximise their investment.
Very good. Helen, we have to leave it there, I'm afraid. Busy day for your results day. We do appreciate you sparing the time to chat. Thank you.
Thank you. Good to see you.
Some other business news stories for you now. And shares of BT Group have surged by more than 11% this morning as its new chief executive unexpectedly raised the dividend and set a target to double the company's free cash flow over the next 5 years. Alison Kirkby also held out the prospect of disposing of BT's global business, as she said BT had reached peak investment on the rollout of full fibre broadband. She said BT was on target to have full fibre available for 25 million premises by the end of 2026. BT's pre-tax profits for the year to the end of March came in at £1.2 billion. That was down 31% on the previous 12 months, reflecting higher investment costs and a write-down in the value of its BT business unit. New product launches, including Ambrosia porridge pots and Angel Delight ice cream, have helped Premier Foods to a sharp rise in sales and profits. The company, whose brands include OXO and Mr Kipling cakes, reported an adjusted pre-tax profit of £157.9 million for the year to the end of March. That was up 15% on the previous 12 months. It said price promotions of products such as Lloyd Grossman cooking sauces and Bachelor super noodles had helped it grow grocery volumes during recent months. The shares are ahead by 0.5% right now. Well, Wall Street closed at new record highs last night following softer than expected US consumer price inflation data, sparking a positive session for equities overnight in the Asia-Pacific region. Well, here's the picture in Europe just now. Again, slightly less positive right now. Only the MIB Milan in positive territory right now. Talking points today include Siemens. That's off 5.25% in Frankfurt this morning after warning of possible weakness in China. Well, here in London, the FTSE 100, which last night hit a new closing high, is currently off 0.25%. The main reason for that is because a number of heavyweights, including Shell, BP, Unilever and GSK, have all gone ex-dividend today. In other words, they're trading for the first time without rights to the latest payout. Don't worry if you hold those stocks. It's just because they've gone ex-div today. BT's the leading blue-chip gainer, just mentioned them, while Vodafone continues to be sought after its results earlier this week. Outside the FTSE, Auction Technology is ahead 12% on better-than-expected results, while others benefiting from trading updates today include Helios Towers, Future and Watches of Switzerland. All of those are up by 10% or more. Here's the picture on the foreign exchange markets. Not a great deal going on, to be honest. Sterling off 1/10% right now against the US dollar. Meanwhile, the oil price, well, last night, that hit its lowest level since the 26th of February on demand concerns. Barrel of Brent crude currently changing hands at $82.45 a barrel. That's off 1/3%. Well, with me now in the studio is Lindsay James. She's investment strategist at Quilter Investors. Lindsay, great to see you this morning. Got to start with BT. What a turnaround.
I know, it's phenomenal. Really quite a strong share price reaction there. I think it might not be so pleasing to everyone. There's around 15% of the shares out on loan at the moment. So that's an indication that there's some short interest there. There's people who are betting that share price would be falling. But of course, we've seen Alison Kirkby being able to really reverse the trend that had been in place there.
Yeah. Now, what did you make of EasyJet's figures? Obviously, we've just been speaking to the CEO, Johan Lundgren.
Well, they actually looked OK to me, to be honest. You know, we had decent revenue growth coming through. They were talking as well about reasonably good trends in place for the summer ahead. Now, I think there might be a little bit of disappointment that they use quite sort of cautious language about the summer still. Of course, we saw Easter falling into this first half period, where usually last year, in certain cases, it fell into the second half as well. So there might be a little bit of concern just around, you know, how strong this summer period can be. But overall, those results did look OK. Of course, the holiday business up 42% in terms of customers, then looks really strong, potentially a big growth driver for the future there too.
Yeah, good, neat piece of strategy there. Now, the big story that broke last night, of course, was International Distribution Services, a parent of Royal Mail, agreeing, well, saying it's minded to accept a takeover approach. I've just been told that the business secretary is with Keith Williams, the chair of IDS, right now. Obviously, this is going to be quite a contentious issue politically.
Well, that's right. I mean, it's not only the Royal Mail brands that they'll be nervous of seeing going into foreign ownership. It's also the fact that this is really sort of crucial infrastructure in the UK. It's got a 500-year history, and a lot of people feel very strongly towards that brand. So it's going to be looked at closely. Now, we're already hearing Daniel Kretinsky's EP Group saying that they're going to be looking after employees, the agreements will stay in place, that universal service agreement will also be protected. So they're saying all the right things. The government have previously also agreed that he is a suitable shareholder in the business. Now, they're already the biggest shareholder. So, you know, I'm not sure what they could find sort of a problem with, particularly given, of course, IDS have been nervous about, you know, being able to continue the letters division profitably. They haven't had a lot back from the government.
Yes, well, and that's the crucial point. I mean, potentially, if the government does agree to relax the universal service obligation, this is potentially a much more profitable business. To that extent, it looks quite opportunistic, the timing of all this.
Yeah, well, this is it. Now, EP Group are the biggest holder in PostNL. They also have a great parcels division. I think maybe there's a hint of some synergies being the attractive part of this business for them, but that does imply an eventual breakup of the group. And that, of course, has negative connotations for the letters business, which is the difficult part of it. So at the moment, EP Group is saying, no, that's not the plan, but it really depends on how long they're willing to commit that not being the plan for. And I think that will be one of the topics of conversation that the government are focusing on as well. OK,
Lindsay was so pushed for time today. Got to leave it there, I'm afraid. Lovely to see you again. Thank you. Now, the FTSE 100 enterprise software company Sage has reported another sharp rise in profits after small and medium-sized businesses continue to sign up for its services. Underlying operating profits in the 6 months to the end of March came in at £254 million. That was up 18% on the same period last year. With me now is Steve Hare. He's Chief Executive of Sage. Steve, good to see you as ever this morning. Revenues were up 11% during the period. How much of that came from price and how much from volume?
Yeah, so morning, by the way. Yeah, so about half of it is from price. But we continue to see real strength in terms of acquiring new customers, but also continuing to deliver value to our existing customers. So even where we're putting up prices to our existing customers, we're continuing to deliver more value to them so that they can continue to digitize their own businesses and get productivity as they continue to adopt more digital tools.
Now, the share price has fallen by as much as 13% this morning. You seem to have spooked the market with your revenue outlook.
Yeah, I mean, we said that we'll continue to grow at the similar rate to what we've grown in the first half. So, you know, we're doing what we said we would do, which is deliver double-digit revenue growth, accompanied by you know, an improving margin. So I think, you know, look, we've delivered double-digit revenue growth. We've delivered a 23% earnings growth in earnings per share, and we've said that that growth rate is likely to continue. So I can't comment on how the market reacts, but from my perspective, that's a pretty strong set of results.
Now, the last time we spoke, you were just announcing the launch of Sage Copilot, which is your digital productivity assistant. What's demand been like thus far?
Yeah, we're very excited by it. So it's in early adopter status in the UK. So we've got about 150 customers using the live product and giving us feedback. We've been showcasing it this week at Accountex, which is the big accountancy show here in London. And yesterday on the stand, we did over 1,000 live demos. So we're seeing a very high level of interest as I think small, mid-sized businesses can see how it's going to help them with their productivity, but also give them greater insights into running their business. So yeah, very excited by the prospects.
Now, innovation and new products is what you're all about. How much are you spending on R&D right now? Is it more or less than historic levels?
Yeah, so it continues to increase. I think, you know, in this current year, we'll probably spend, you know, in excess of £350 million on R&D. So as a percentage of revenue, it's been increasing. We'll continue to do that. And, you know, we're very much seeking to accelerate the pace at which we are delivering our products globally. So we have R&D teams all over the world. We're investing in expanding our R&D capacity. And, you know, in things like Sage Copilot, we're leading the industry, and we're very proud that we're able to, you know, deliver that and keep at the forefront of what's happening in our space.
You're also rolling out a product called Sage Intact across Europe right now. Now, you launched this only in English-speaking markets previously. Why was that?
Yeah, so it's a product that was derived in the US. And so the obvious sort of progression initially was English-speaking countries, which are more consistent with the way the product was structured for the US market. And then in the background, we've been working on ensuring that it was capable not just of speaking multiple languages, which in many ways the easy bit. It's the fact that compliance in Europe is a bit more complicated. The tax laws, the local accountancy, et cetera, is a bit more complicated in Europe. So we are now live in France with live customers, and we've just launched into Germany. So again, longer term, these things take a little while to get going, but I think over the next few years, you're going to see that, you know, that is the best mid-market financials product in the world. And we will start to see real traction in Europe, I think.
And more broadly, Steve, how would you assess confidence among your SMB customers here in the UK right now? I mean, it feels from all the survey data as though there is a bit more optimism around.
Yeah, I think they are a bit more optimistic, Ian. I think that's right. But I think what people like to see is stability. So whether it be interest rates, whether it be inflation, you know, people want to see where is that going to settle so that I can plan accordingly. So I think we are starting to see, you know, customers being more confident about where the environment's going. And they, as I say, they're looking to adopt technology to help them grow their businesses. And I think that's what we all want to see. We want to see everyone focused on growing. And then, you know, in the UK, SMBs are responsible typically for about 2/3 of new jobs. So we need SMBs to be optimistic and healthy to help grow the economy.
We absolutely do. Steve, always good to catch up with you, especially on such a busy results day for you. Thanks very much indeed.
Thanks, Ian.
That's it from me for the time being. I will, of course, be back with our afternoon edition at 4:30. Hope very much to see you then. In the meantime, do stay tuned after this short break. It's Jane Secker, obviously, reaction to Keir Starmer's speech and the latest on the health of the Slovak Prime Minister. Do stay tuned for all of that. I'll see you later on. Thanks for joining me this morning. Cheerio.